So today's a sad day for anybody holding RioCan. There's a dividend cut. It went from 12 to 8 cents, a 1/3 reduction. This is devastating news for anybody that counts on that dividend income, especially from what was seen as a very strong dividend payer in the Canadian REIT space. So what now? Do you hold RioCan? Do you buy? Is this a good time to get in? Or do you get out and put your money somewhere else? Let me tell you my thoughts.
You have to pay attention to your money.
So what happened here? Well, prior to the crash in March, RioCan was paying a yield of about 5.7%. The company looked very, very solid. Future was really rosy. And I think a lot of people were buying it even at that level of yield. 5% was still pretty good. When the price bottomed out in March, that yield, of course, shot up to 9%. Now, after that point, the price, of course, stayed down near the bottom. And even as the rest of the broad market started to recover into the summer timeframe, RioCan did not participate in that broader recovery. The price stayed low. And I think this was one of the first signs that the market was pricing in a dividend cut. This tends to be what happens when the initial shock wears off. If the market believes that the dividend is going to be safe, that alone is going to drive the price back up to at least recover a little bit. However, if the market believes that the broader shock is going to mean a cut down the road, a couple of quarters away, then the price is probably going to stay where it is in anticipation of that cut. In hindsight now, I think that's absolutely what happened to RioCan in the summer timeframe. So if you look back at that timeframe and if you look what happened in April, I think it was April 21st here, there was a statement from RioCan that was reassuring to investors, I think. There was a lot of talk about deep liquidity. There was a lot of talk about quality tenants. There was talk about the temporary nature of what was going on. There was talk about rent collection being secure, from the quality of tenants. So all of the things that RioCan had in place to support a stable and solid business model, they were calling attention to those things and saying, hey, we're going to be okay. And really that was reinforced just a little bit later. On May 12th, the CEO of RioCan, Ed Sonshine, went on Bloomberg and made some comments that were very reassuring to investors. He all but guaranteed the safety of the dividend during that interview. Of course, he didn't come out and say it, he can't, but he was very, very reassuring and certainly gave the impression that things were all good. I think a lot of people that followed the stock at that time were reassured, and it probably cost more people to buy in. At that time, Ed even made the comment that a lot of these quality tenants of his that might be struggling in the near term could easily get by with just a little bit of bridge financing or maybe some government assistance, and that absolutely materialized. They did, in fact, get some of the help that they were looking for. I think the first sign of trouble out of RioCan was probably in July when earnings were announced for the quarter. If you look through that statement, there were some indications that things were not recovering as quickly as that they would like. I think there were some decreases to FFO that were bigger than some folks were expecting. And I think overall there were some bearish statements in that earnings release. There were some references to Alberta being a problem. And so I think that was the first time that there was a good indication that there were some systemic problems that might not mean a very quick recovery. I think that lack of reassurance as well in that particular earnings release was probably a key moment. The fact that they didn't use that opportunity to further reassure investors about the distribution tells me that maybe they knew something at that point. So of course, I'm here looking back in the past. Hindsight is 2020. It's kind of ridiculous for me to claim that I saw this coming, but I am trying to point out the fact that we can sometimes learn from what we might have missed in the past and try to apply that to lessons go forward. In hindsight, I do think some of those signs were there. So in hindsight, how could we have seen this coming? Well, I think that, again, like I said, the bearish talk or the lack of bullish talk in those releases was a telling sign. I think the fact that the price did not participate in the broader recovery through the summer was another huge sign. The market was definitely making a bet that something was fundamentally wrong there. And really, the big thing for me is that there are far too many headwinds overall for a company like RioCan. Regardless of what happened this year or not, I think there are fundamental headwinds in that particular business that were exposed or made worse by what happened in 2020, but they were still there all along. When you look at the nature of retail, when you look at the pain that that sector is going through, when you look at the decreased traffic in some of these properties, and now when you pile on the additional factors like the increased drive to work from home, the hollowing out of these downtown cores, the fact that people are not going to movie theaters, the rise of streaming services, the rise of work from home, all of these things are combining to put a lot of pressure on a business model like the one that RioCan has. And really, I think it's absolutely true that what's happening now in 2020 is accelerating something that was going to happen anyway, but it would have happened over a longer period of time, right? I think that these trends are now being sped up to the point where it's really difficult for a large company like RioCan to pivot and turn over their property portfolio quickly enough to adapt to the circumstances that are happening here. They're getting caught by something that's moving way too quickly. So in summary, what would I say about RioCan? At the end of the day, this cut is not the end of the world. I know it's devastating for folks that rely on that dividend income, but really it doesn't mean that the company is near bankruptcy. It doesn't mean that they're in desperate trouble right now. I think overall, it simply means that investor sentiment will have turned a little bit, at least in the dividend community. Really, I think, though, that you have to pull back from this dividend cut and look broadly at the overall future prospects for this stock. I think given the fact that this cut's happened, it's an indicator that their business is going to continue to struggle in the near to the intermediate term. That is going to put a cap on price appreciation. I don't think you're going to see that number climb nearly as quickly as we would like into 2021 and 2022. I think that the prospects for a dividend cut are probably minimized now that the cut has already happened. Obviously, I think further cuts are less likely. But I also think that increases to that dividend are off the table for the near to intermediate term as well. I think if you're looking for growth in terms of that payout, you're not going to get it from RioCan in the time frame that you would want it. And also, like I said about these headwinds, I think these are long-term trends. They are not going to evaporate in early 2021 when things go back to normal. These are things that are going to continue to be a painful problem for RioCan to deal with. So overall, I think if you add up all of these factors, there are better places to put your money. This is one particular business that is better given a pass for now. Go find something that is a safer place for your money that offers better returns, both in terms of the dividend yield and future price appreciation. There are better deals out there. So that's it, guys. I hope this helps. I hope that you didn't lose too much in RioCan. And I hope that you're out there right now looking for a better place to put your money. If you like this video, please consider giving it a thumbs up. Subscribe if you haven't already. Ring the bell, and I'll see you on the next video.